Ladies and gentlemen, good day and welcome to the MMP Industries Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddesh Chavan. Thank you, and over to you, sir.
Thank you, Rutuja. Good evening to all the participants on this call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risk that could cause further result, performance, or achievements to differ significantly from what it is expressed or implied by such forward-looking statements. Please note that we have mailed the results and the same are available on the company's website. In case if you have not received the same, you can write to us and we will be happy to send over to you. To take us through the results and answer your questions today, we have the top management of MMP Industries Limited, represented by Mr. Arun Bhandari, Chairman and Managing Director, Mr. Mayank Bhandari, Director, and Sharat Khandelwal, Chief Financial Officer. We will start the call with brief overview of the quarter gone past and then connect the Q&A session. With that said, I will now hand over the call to Mr. Arun Bhandari. Over to you, sir.
Thank you, Siddesh, and good afternoon. Namaskar to all the participants. Warm welcome to you. This is our first earnings call, and I would like you to know a little bit more about this company. There will be many of you who are already aware of our activities, but for the benefit of new participants, I'd like to give you this overview. MMP Industries Limited was earlier called Maharashtra Metal Powders Limited when we were only in the manufacturing activity of aluminium powders. The brand was always MMP, and when we diversified our operations into aluminium conductors, we changed the name of the company to MMP Industries Limited, thereby retaining the brand and ensuring that any other activities would also be encompassed in this name. MMPIL was started in 1983 as an entrepreneurial effort by me. I had worked for 4 years with Dunlop India and decided to branch out on my own. And we purchased a 20-acre private land 65 kilometers east of Nagpur in Bhandara district. We started with a small capacity of 300 tons per annum of aluminium powder. Manufacturing began in 1983, and at that time we had borrowed, or rather purchased, technology from the then H. Andre and Bandler Berge, now known as AVL Metal Powders. They have been our associates all these years, and we still retain a good relationship with them. Aluminium powder is used in explosives and also in certain pesticides, in AAC construction blocks, paints, leafing applications like printing inks, thermite welding of railway tracks. In addition, it has a variety of uses in the steel industry, ferroalloys, refractories, etc. We also cater now to a small extent in the Indian defense sector, and of course we are now looking to enter the space market also. Our plant in Bhandara was then expanded over a period of time into aluminium powders. We then purchased a second-hand facility of the then Indian Aluminium Company in Kalwa and shifted the aluminium paste-making project to Bhandara. We then also set up 3 atomization units, and all these are housed in that 20-acre facility, which has now been extended by another 8 acres. The second phase of our expansion was aluminum conductors. This was in the year 2011-2012, and last year we have added a value addition aluminum cable sector into that facility. In 2018, we had listed ourselves in the SME NSE sector, and thereby in January 2019, we upgraded ourselves into the main board. This IPO was to expand our aluminum powder facility into a new location, which is 60 kilometers southeast of Nagpur, in a place called Umred. It is an MIDC facility, and there we expanded aluminum powder as well as set up a foil rolling plant and a foil converting plant. Because of COVID during 2020 and 2021, our foil facility was delayed, but eventually last year we were completely done with the new project and have now been establishing ourselves in the foil sector, primarily in the pharma focused areas. In addition to MMP, we have a joint venture with a Japanese company, the biggest manufacturer of aluminum paste in the world. It's a 26% participation in a company called Toyal MMP India Limited. We were largely instrumental in working with Toyo to set up the project for them. This is 30 minutes south of Nagpur in another MIDC area. We are also a 26% equity holder, 26.06% to be precise, in our sister company, Star Circlips and Engineering Limited. This unit is manufacturing retaining rings, washers, circlips, and precise engineering parts for the auto industry. We are brand leaders here also, and probably in terms of reputation are among the first 3 or 4 companies in the world. The third facility is a small aluminum powder facility in MIDC Nagpur, where we have a small ball milling capacity. And in addition to the Hingna facility, which is in Nagpur, we do a small amount of trading in manganese dioxide and other chemicals. So this is as far as our company background is concerned. We've been in operation since 1983. We've been largely growing with term loans prior to our IPO in 2018, and it has been a steady journey in niche sectors, and we are in the aluminum powder industry largely a 60% plus market shareholders in all the applications in which we cater our powders to. I will now hand over to Mayank, who will take you through the performance and operations as well as any questions that will follow. Thank you.
So, thank you. Good evening, everyone. I am Mayank Bhandari, Director of MMP Industries, and I am first of all pleased to present our Q1 financial year 23 results. So despite all the challenges faced, we have reported a satisfactory performance this quarter. Total revenue was up by 72% year on year, from 86.3 crores in Q1 of FY22 to 148.3 crores for Q1 FY23. The growth was mainly driven by, number one, the increase in the aluminum foil division, which is now running well. Last year it was just under, it had just started. So the growth in aluminum foils was by 198%. The growth in revenue in the aluminum powder segment was by 53%, and in the aluminum cables and conductors segment was by 86%. Aluminum powder reported a total turnover of 108 crores for Q1 FY23, compared to 70.6 crores in Q1 FY22. Aluminum foil stood at 31.3 crore for Q1 FY23 compared to 10.5 crore in Q1 FY22. And aluminum conductors was 8.2 crores for Q1 FY23 compared to 4.4 crores for Q1 FY22. So overall, we had a very healthy revenue growth. It was driven by both higher aluminum prices compared to Q1 of last year, as well as very robust volume growth. EBITDA and PAT margins experienced some pressure mainly due to the falling metal prices compared to the previous quarter, like resulting in a 35% drop in aluminum prices, which impacted our inventory valuation. Thus, margins were very deeply impacted with that. Margins were further affected by extreme inflationary pressures, along with higher fuel, power, chemicals, and freight costs. All these are known worldwide, and this has had a big impact on us. Our net profit our net profit consolidated for the quarter stood at 4.7 crores compared to 5.7 crores in the corresponding quarter last year. On a concluding note, I would like to say that the company had to withstand several external challenges through the quarter. We are confident of overcoming these with several encouraging developments that we have undertaken and opportunities that lie ahead of us. And we'll be able to explain that greater in the Q&A session. And with this, I would like to open the segment for any questions that you may have. And please don't hesitate to ask us any questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chirag Siroya, an individual investor. Please go ahead.
Congratulations, first of all, to the MMP industry. Being an individual shareholder since IPO, I'm noticing the performance of the MMP industry and all. So few questions are there. With respect to one is with respect to the, in spite of the increasing the top line, the bottom line growth is not happening either because of the, as you mentioned, that because of the raw material prices correction and all. So how the company is planning to manage this inventory losses that is happening and because of which the bottom line is getting affected. Secondly, I would like to know on aluminum foil future, the revenue has increased as compared to YOY, but it has reduced as compared to March quarter 22. So how the company is competing with giant industry players like Hindalco and all in this segment. And the third one is with reference to the how the company is planning to expand in future. So whether they have internal approval or they are planning to avail any kind of borrowings from the external sources.
Okay, so I am Mayank Bhandari, and I'll be answering your few of your questions along with our CFO, Mr. Sharat Khandelwal. So, first question is why was the profitability impacted? It is very obvious that the steep metal fall, like the aluminum prices fell down by 35% within 2 months. So that really had a big impact on our inventory valuation, and that resulted in a very steep loss. That aluminum lost so much value within such a short space of time. So that was the primary reason why, despite having a good top line, we were not able to report better PAT and EBITDA margins. Mm-hmm. So that was number one, and there was a big impact on prices of electricity, prices of fuel, transportation costs. in general, the entire inflationary pressure was witnessed altogether in this quarter. So, what the ideal case scenario for us would be to have some stability in pricing of aluminium. These wild fluctuations of aluminium going up and then crashing suddenly, that has definitely had a big impact this quarter. And I hope that, with stabilizing aluminium prices, as you have seen for the last 3 weeks or so, we'll be able to shore up our performance in terms of PAT and EBITDA margins.
Okay.
Yes. Now, coming to foil, the reduction in revenue in the foil segment. Number one, there was again, like I said, steep correction in the price of foil. The foil prices crashed again, close to 40% in the first quarter itself. So that was number one. Number two was we had some downtime issues in our plant in the first month, that is April, and that was due to some quality problem. And that is why April as a month was not very nice in terms of the sale value. Had that been the case, we would have reported better numbers. And so that was the reason why in this quarter the foil revenue showed a little bit of a downtrend. We are hopeful, in the coming months this will shore up significantly, and we have identified foil as a great growth driver for our company. Number one, because we have capacity. Number two, we are increasing capacity, which should be operational by Q1 of next year, additional capacity. And also we are at the various stages of approvals and validations at various large pharma companies like, Alchem, Sun Pharma, Ajanta, and a whole lot of these pharma companies. So our pharma business, although has ramped up very well, but the potential is huge, and we are on the cusp of some big breakthroughs.
Okay.
Then answering your second question on the foil, how are we planning to compete with Hindalco and other large players? So just to give you a brief of the foil industry is extremely immense, and there are various type of foils which different people cater to. So Hindalco, for example, is not present in the pharma sector at all. Another big player like Shyam Metallics, they are also not present in the pharma sector at all. Their main focus remains the ultra light gauge foils, the 7 microns and below, which we are not manufacturing at all. Our primary focus remains the pharma industry, where we want to serve them value-added products, not only plain foil, but we are also coating, converting, and printing foils as well. And our aim is to achieve 100% printing utilization as soon as possible.
Okay.
So our business segment compared to some of these large players like Shyam and Hindalco is totally different. It's totally different.
Okay. Okay.
Yeah. And with respect to the ongoing expansions and the future plans, as of now we will only finance it through internal accruals, and for example, the second rolling mill that we are in the process of setting up, and that should be commissioned by the Q4 of this year or maybe Q1 of next year. It will give some revenue as well. So it is all being done through internal accruals, and as of now we have no plans of going for any borrowing from external sources.
Okay. In terms of volume, just I want to understand that how management, what exactly the management is expectation in respect to the order book with respect to this Q2 as compared to the Q1.
Okay. So we don't have an order book per se, because these orders are coming regularly as and when the demand comes. So we don't get orders like 3 months or 5 months in advance of that sort. So let me start with the powder segment. Powder segment, if you look historically, Q2 is generally our slowest quarter, and the reason is the monsoon season. So the mining activity is reduced during the monsoon season, the construction activity is reduced during the monsoon season, and also the phosphide activity is also a little on the lower side. That said, comparing it to last year of Q2 of last year, we are definitely going to see 10% to 15% volume growth. And although it will be, traditionally this is a low quarter, but this time we are going to see some business growth compared to Q2 of last year in terms of the powder segment. Foil definitely will be seeing some very, very strong growth. Like I said, we are on the cusp of approval of some major pharma companies, and we are also getting more and more orders in the value-added segments of printing. So, we are very confident of achieving good volumes as well as, better margins in the coming quarter, especially in the foil division. The key remains to ramp up our printing section as soon as possible, which we are hoping to achieve with, we are just on the edge, you can say that.
Okay. And what is the operating cycle of the company, working capital cycle of the company?
So I'm handing over to Mr. Sharat Khandelwal. He'll be able to accurately tell you about the working capital cycle of the company.
Yeah. Good evening. I'm Sharat Khandelwal, CFO of the company. So working capital cycle is around, it ranges between 60 to 70 days.
Okay. So is there any plan to bring it down or any kind of to ensure the better relation or kind of thing?
See, we are continuously trying to reduce the working capital cycle, and we have achieved that also. So in our powder section, we have achieved, earlier it was 60 days average debtor period, and now it has been reduced to say 40 days and even below 40 days. Okay. And in foil section, see, there are two sections. One is the bare foil section and another one is the conversion section. So bare foil, we are selling our products on cash.
Okay.
And for the conversion section, some part like printing products, we are selling to pharma companies, so that they are taking some credits like 60 days to 90 days also.
Okay. One last question from my side. As earlier mentioned that there is a rapidly decrease in the size of the aluminum and all. So because of that, there is a hit on the margin. So may I know that how much is the provision has been made for net realizable value, any kind of in the inventory valuation as on June because of this reduction in the prices?
So, like I said, the margin pressure per se is not there because we are working on a metal plus a delta basis. The inventory loss was due to our inventory in-house, the WIP and the FG plus raw material inventory that we had, and this sudden crash resulted in a total decrease in valuation of our inventory, and that resulted, that impacted the bottom line. So that was the reason, and it has been shown on the actual basis. So we have, I did not get the question that provisioning wise, it is on actual basis.
I am asking on the in a way that the inventory which is required to be valued at the cost or net realizable value, whichever is lower. So if the inventory is valued at NRV, net realizable value, that is because of the reduction in the prices, then how much is the provision that has been made in this result or that has been considered?
Oh, you are saying that how much is the impact of the inventory loss, right?
Yes, exactly.
So it was actually big hit. It was more than 4 crore.
Sorry?
It was more than 4 crore.
Okay, more than 4 crore. Okay. Understood. Thank you. Thank you from my end.
Thank you. Not a problem. Thank you.
Thank you. Before we move to next question, reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Dilip Sahu, an individual investor. Please go ahead.
Yeah. Can you hear me?
Yes, Dilip, how are you?
Yeah. So congratulations to the MMP team. I think it's a good initiative. I'm sure the investor community will learn and get value from this Concall. Hope we'll continue the tradition. My questions are broadly into two.
Increase your voice, please.
Yeah. Can you hear me now? Is it better? Hello.
Yes, sir. Please go ahead, Mr. Sai.
Yeah. So, my question are into two buckets. One is regarding the operational aspect. In that, we used to do around 7-8 times asset turns in our business in 2016, 17, 18. And for last 2-3 years, that asset turn has drastically fallen for various reasons. Some of them are beyond our control. Along with that, the gross margin also has fallen. That's a double whammy. And that obviously is reflecting in the return on the capital that we see. This quarter was the worst possible. But so my concern or question is that when do we see the asset turn to stabilize at the earlier level of 6-7%, or what is the a stable asset turn we are driving at? Second is we need to have a defendable gross margin. Our gross margin fluctuates wildly, and I understand inflation. I think that is true for everybody. But the ability of the company to defend a reasonable gross margin depicts the quality and the competitiveness of the company, right? And so I just want to know what are the initiatives the management is taking, so that we don't go from 28-27% to 15, 16, 17% gross margin. 27 itself is a low gross margin. On that, if we fluctuate 50%, that's a real concern. So that's about the operational thing. But I must tell that I am quite happy at the way we have ramped up the foil business and the marquee customers that we have. But at the end of the day, the money is also key, right? Growth and logos are, of course, great. The second question is regarding the business as a whole. If one has to understand this business, there's very little information outside the company brochures and website. So, since it is your first con call, if you can tell something about the industry structure of aluminum powders, particularly, it's a very small niche segment. We are a dominant player, but is there any threat to the business from new players? Why a 200-ton guy cannot scale up to 2,000 ton or more? And why can't they take our business away? Those are the macro level which you don't find about this industry. If you can give some more light on the competitive structure, the supply chain, the barrier to entry, why the customer pays us a premium if at all he does, why a Solara cannot buy from somebody in Sivakasi, for example. That's my second question. Third question is, hopefully we will get into a stable margin structure and our free cash flows will be around 50 crores, assuming that we grow at 10-12% for next 4-5 years. So, since you are practically debt-free or very little debt, working capital debt, if you can tell us what is the utility of this, 50 into say 5 years, 250 crores, that will do. Is there some new avenue you are looking at, or is it just going to be, more volume, more capacity in foil and powder? Or are you going to go into, like the way you went to foil is a 100 crore kind of investment? Are you going to get into some big bang, new, related but, different category of products? So these are the three questions. One is operational, two are basically in terms of industry structure and our competitive strategy, and the cash flow, the capital allocation in terms of the next 5 years. Yeah, that's probably what it is.
Yeah, Mr. Dilip. So first I will address your first question. That is asset turn. When the asset turn will improve? and the gross margins will improve. So basically, it is directly related to the metal price, right?
Yeah, true. I understand that also to capacity utilization, right?
So asset turn was lower earlier because the capitalization was done, but the revenue was not reflected in that particular earlier year. That revenue has started to come in this year, Q4 of the last year and Q1 of the current year. So the asset turn will definitely improve because the revenue will reflect, full revenue will reflect in this year. And so far as the gross margin, as I explained to you, that it is directly related to the metal price, and when the metal price will be lower, our gross margin will be improved. And when the metal price will be higher, our gross margin will show decline. So this is the reason. Because we are working on a metal plus our conversion charges basis. So that's why it is gross margin is also showing adversely.
Yeah.
So far as your other questions, like...
if you can just have a clarification, because I used to believe that we have a pass-through arrangement where 7 days the metal prices get passed on. So does that help us reducing from... And my worry is not the fluctuation in gross margin. My worry is the drop of gross margin by 30-40%. You're getting your point. That's where I have a concern, because that completely negates the point that we have a pass-through, 7 days or 10 days or whatever pass-through.
Mr. Sahu, if I get your question correctly, we are still passing on the price increase or decrease maybe in 7 to 10 days. But the problem is that the drop in prices of aluminium, right? Or rather, since we are working on a metal plus conversion basis, so if the metal is on a higher side and our conversion is remains the same, so overall in percentage our margin goes down. But in case the metal price comes down and the conversion remains the same, then definitely the percentage wise the margin will improve. The real drastic drop this quarter has been primarily due to the inventory loss that we have taken. Yeah, this quarter was, but if I compare with 16 to 18 months, when our metal prices went again to a wild ride, our margins were not as, gross margins were not as dramatic, we made, yeah. Because, the metal that time also had not touched such highs. And, whatever the fluctuation was, not very drastic. Like, what happened was like 35% crash in a matter of 35-40 days. We have personally never seen a cycle like this, where it went up so quickly and came down even more quickly. So that is, this entire period is an outlier, I would say. And that, we are hoping now for some stable level of the LME. Ideally, if the LME now stabilizes at this level, you will definitely keep on seeing improved performance from the company in terms of the margin percentages and stability.
Yes. So can we say that a 6-7 times fixed asset and a 25 to 27% gross margin is something that we can hold ourselves accountable for next, assuming of course that the metal price of varies 20% band?
I did not get your question very clearly, Mr. Sahu. You can just there was a lot of static noise that time.
I'm sorry. My question is, a 6-7 times asset turn and a 25-27% gross margin, is it something that we can reasonably deliver, assuming that the metal prices remain within a band of 20%?
No, this is really 6 times and 7 times asset turn looks to be difficult presently. Fixed asset turn.
Sorry?
fixed asset turn. I'm asking about fixed asset turn.
Asset turn, I am saying you that you are saying that when we will achieve the fixed asset turn of 6 to 7 times, right?
Okay. Yeah.
So that is, at present it is difficult. What we are projecting that we can achieve 5 times of asset turn in in 2 years' time.
Yeah. And this 25% is gross margin we will maintain, right? And this quarter has been
at that time our gross margin may be around 27% or above that.
Very. Yeah. Okay. Thank you. Can you just answer the other two questions, which are more broad in terms of the industry and what is your cash flow?
Mr. Please write down to us, so we'll give a detailed reply on that.
Sure, I'll do that. And about the capital allocation, are you going to give it some in terms of dividend, or is there some thought on the capital allocation for next 2-3 years?
That also we can reply.
Yeah, that we can also reply on mail. Please drop the mail.
Okay, sure, I'll do that. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Vijay Sarda from VL Finance. Please go ahead.
Hi, Mayank. Vijay here. Mayank, just 2-3 questions. Basically, one, just to understand this kind of wild movement that what we've seen in the aluminum prices. So, at any given point of time, we do carry 2 months or 2.5 months of inventory, means 50 to 80 days kind of inventory in our book. So, are we not hedged for this kind of risk because this is an ongoing thing and commodity, we are commodity plus. So, are we not hedging this or there is some open position always there? So, this is the first question.
As a company, we have never hedged and we have never taken any open positions or any speculative positions. And everything is spot buying and everything is on actual. So, from a company perspective, we have never done any hedging or any, speculation of that sort in terms of the metal itself. In terms of the inventory, I would like to state that, our raw material inventory in the powder segment is about, say, 7 days or 8 days. That is the ingot. Our semi-finished and FG inventory in the raw material segment is about 35 to 45 days. Powder segment. Our inventory in the aluminum conductor segment for raw material is about 5 to 10 days. 7 to 10 days rather. In semi-finished and FG for aluminum conductors is 15 days. For foil, definitely we carry a lot more raw material because we have to import also. We have imported certain aluminum foil stock, where we have to order 4 months in advance. And that way we have to keep a 30-day inventory of raw material in the foil division. Also due to the fact that there were some delays in supply from Hindalco. So that's why we are sitting sitting on an inventory of 30 days for the raw material and foil, and the semi-finished and finished goods inventory is about 20 to 25 days.
So the price downtick also continued in month of July. So do we have an impact in this quarter also on account of the same? Now it is stabilized from last 18 days. So this quarter we have taken the entire impact, or this quarter also you see will see some hit on account of this?
We have taken the full impact as on actuals, as on 30th of June.
30th June.
On our first quarter account. In July, of course, prices have gone down, but not that drastically. That is something that we have experienced in the normal course of our working of so many years. So basically, there will be a little impact, but nothing close to what happened in the first quarter if the prices now remain at this level.
Okay, so I just wanted to understand. So same happened on the up move side also. When the prices were moving up, we were getting the benefit of the same, right?
Yes, we did get benefit, but the benefit, the up move did not happen so drastically as the down move.
No, so basically, means I'm just giving an example of Titan. Means basically they are dealing in gold. So what they do is their entire quantity is hedged because their business is very thin margin business and they can't take a risk of this raw material. So in aluminium, definitely we can hedge our inventory, or at least to some extent our position on aluminium, basically LME exchange on there. So Isn't that the prudent thing to do? Because eventually, at any point of time, we will be sitting on 60 days or 30, 40 days of inventory combining on the raw material as well as finished good. So because, as you rightly said, we never seen this kind of volatile movement in the past of such a drastic kind of quantum like percentage move. But eventually, for business like us, where we are only a converter or conversion plus margin is our aim, then why should we take a risk of this metal and because it makes us more like a commodity business at the end of the day. Because here we are not a commodity player, we are not mining anything from the mines and all that, and that's why we don't have to hedge and all that. We are buying and we are open to the risk. So that's what I'm saying, because most of the people, they do hedge their position if they are in the conversion business. So is that thought process that you feel has to be implemented over a period of time in order to avoid this kind of consequences going forward? Are you thinking on this line, or means this is kind of one-off kind of move and you don't feel that is going to help?
So looking to the level of volatility in the past quarter, now it is the time to think again on our policy of hedging.
Yeah.
Because that much volatility we never seen in the past.
Are we just
We will definitely think about this hedging policy.
No, because what happens is it distort the entire value of the business, because then we don't get treated as a converter, basically a high margin business. Then people say, boss, any fall in deep in commodity will impact us.
If you carry an inventory of the same level, like 1,000 ton you are carrying every month.
Yeah.
So I don't think it will impact. So, but it will impact if you speculate and increase the inventory from 1,000 to 2,000 ton, and then
No, that is purely speculation. Depending, that is speculation that you are not into. But what I'm trying to say,
same level of inventory, I don't think this volatility will impact in long run.
No. I mean, this is, as you rightly said, this kind of fall doesn't happen every kind of fortnight or every year. It is one-off, but still, I am saying, as a prudent business, what if I just wanted to understand if you want to hedge also, what is the cost of hedge if you roughly do so?
So, see, that is something we will definitely think about. Like I said, as a company, we have never done that before, and it is something that is on the table, and we will take a call looking at the trends and getting various quotes on the cost of hedging and the other aspects.
Okay. Secondly, just coming to this foil capacity, how much operating capacity there we are utilizing? Basically, what is the capacity utilization in the foil facility? And when is this second expansion going to kick in? So we already got the second expansion already kicked in of 3,600, or still under the process?
So the second expansion, the process has already started. The machine has been ordered, and we are expecting deliveries to commence somewhere around the Q4 of this year, this financial year.
Okay. So next year we will
that is
be able to...
something that will hopefully give us revenue from the Q1 of the next financial year.
Okay. And how much capacity utilization we are currently in foil?
Like I said, in the bare foil rolling section, you can say our capacity utilization is in excess of 80%. But in the conversion section, we are somewhere around 45 to 50% right now.
No, conversion means, which one? Conversion means basically product side. So foil.
No. So basically what happens is we purchase the foil stock from Hindalco, we roll it, then we convert it. Conversion is of two types. Number one is the pharma laminate, and number two is the blister coating.
Okay,
and
so basically
after
rolling...
that it is the printing. So the entire conversion section is the pharma, blister and the printing.
Okay, so the value added, basically this is rolling is a normal rolling where the margin is lower, but once you get on higher on this conversion, then the margin will also expand, because this is a specialized business. This is a commodity kind of, rolling is a commodity. So, okay. So, and there, as you rightly said, you are adding customers and getting good traction. So once you get from 80%, 45% to incremental share, there the margin will expand in the overall foil business. Is this the right thing to understand?
Absolutely correct, and that is what we are aiming for, and that is what we are very confident about.
Okay, got it. So just one more.
To Mr. Sarda, may I request you to please rejoin the queue? We have participants waiting for their turn.
Okay, no worries. Thank you. Thank you, man. Yeah.
The next question is from the line of Amir from Banyan Capital. Please go ahead.
Thank you for the opportunity. Just a couple of questions from my side. So what was the volume growth sequentially in the foils segment?
Volume growth in the foil segment compared to the Q1 of last financial year, you are saying?
No, Q4 sequentially.
Oh, you can say it is close to flat.
Okay, and the prices fell, so that is why the revenues also fell, right? Hello.
I did not get your question here.
So basically, the prices of the metal fell this quarter, right? And that is why the foils revenue also fell sequentially. Is that understanding right, sir?
Yeah. So the foil revenue fell due to two reasons. Number one was the downfall in price, and number two was because of our own internal quality issue in the first month of April. That if that wouldn't have happened, definitely the result would have been slightly better in this Q1.
Okay.
There were some technical issues in our plant.
Okay, so how much volume was impacted due to the technical issue?
I do not have the exact number right now, and so I'll be able to give you that exact figure on email separately. If you can just drop me an email that how much volume was impacted because of that issue.
Sure, sir. Sir, in the powder segment, aluminum powder segment, so we have more than 60% market share in almost all the sub-segments. So where do you think the revenue growth will come from going forward next 2-3 years?
So where do we think the revenue growth will come for in the powder segment, right?
Yes.
Biggest revenue driver in the powder segment is obvious will be the AAC construction segment. We expect that to be a very fast growing segment, and where we command a good premium as well as a good name in terms of quality. So I think revenue wise that will be the fastest growing segment for us.
Okay, got it. Just one question. So basically, in the press release that in the first quarter's press release, you had mentioned that the foils industry is likely to witness increasing competition. So below 7 micron market obviously has more competition. So are we also talking about the above 7 micron segment, which we cater to basically?
Yes. So if you see, apart from the ultra light gauge, there will be people coming into our segment as well. Our existing competitors are expanding as well. So it is likely to see competition. How it impacts price, it remains to be seen. But we have to be aware to the reality that there will be people trying to break into this segment. It's a fast growing segment, no doubt about it, with good potential. So we have to always look at it from a very keen eye.
So, for overall revenue growth of the company, foils is a major driver, right? And we are catering to the niche segment in that also, the above 7 micron segment, which is basically catering to pharma. So if players like PG foils and all, they start getting aggressive in this segment, so isn't that a threat to our revenues going forward, or how do we see it, sir?
I don't see that as a threat because we are already at a lower base. We are a new player, so we can only grow in this. So I won't call it a threat, but there is competition, and we are confident that with our quality, with our consistency, and with our approvals in various big pharma companies, we'll see good growth in this segment. No doubt about it. Absolutely no doubt about it.
So are we expecting those 3 pharma companies to give approvals this year? Ajanta Pharma and Sun Pharma?
Yeah, we are already an approved supplier to a variety of large companies. Some of the very large companies are also in the pipeline where we are expecting orders very soon. Audits have been complete. We have passed the audit. The general vendor code creation process is also complete. Just final some documentations are remaining, and I definitely again I'm very confident that this will be the main driver of growth in the coming quarters.
Okay. So just last 2 questions from my side. When are we expecting to turn free cash flow positive?
then are we expected to turn free cash flow positive? I think that should be sometime the next financial year.
Okay. So FY24. Okay. And lastly, sir, the tax.
May I request you to please rejoin the queue, sir?
I just had one question, if I can. Just a data-related question. Sir, our tax rate was quite low this quarter. What was the reason for it, sir?
Tax rate was quite low this quarter. What was the reason?
Yeah, we had some provision made for our doubtful debts. So that was reflected in this quarter.
Okay. Thank you so much.
Thank you. The next question is from the line of Chirag Siroya from an individual investor. Please go ahead.
Sir, the last question which was just asked related to the tax rate. So I was also about to ask this question only that as you mentioned that this is because of the bad debt provision. So I think this should have a corresponding offsetting impact in the current tax as well as the deferred tax. So accordingly, there should not be any much impact on the tax aspect. So would request you to please give us the detailed answer of this. And the second one is on as earlier asked that with respect to the inventory hedge. This was again with respect to this since we are procuring on a spot basis. So how do we or how the company is planning to implement the hedge policy so that they can capitalize on this rate fluctuation and all these things, or to avoid this or drastic reduction or drastic increase in the prices of aluminum. These are the two questions from my end.
So, for your question number 2, hedging is something that we are discussing. It is on the table. We have never done it before. So, number 1, we need to first understand how this will work for our business and take a call with respect to whether we want to go ahead with it or not. But it is definitely something under discussion. I'll not be able to give you a timeline that by when we'll be able to do it or when not be able to do it. But it is definitely under active discussion amongst us.
Okay.
And for the tax provision, already, we have, it was a bad debt provision and hence the tax rate applied was on the lower side.
But generally, sir, I come from a tax background, so generally it doesn't have impact on the tax rate if there is any kind of provisioning or for a bad debt or kind of thing. Because
in the book, it was already provided in the book. But for computation purpose, we have written up and that particular date and taken a tax provision on that.
Okay, understood. But in that case also, there is a corresponding impact on the if either there is a bad debt or either there is a provision. So in both the cases, there is corresponding increase or decrease in the current tax as well as the deferred tax. So I think there should be a two impact of this. As soon as far as I know, this concern. So apart from that, I see some other. Would request if you can just study the further and you can reply on a mail also. It will work for me.
We will reply you detailed reply on mail.
Sure.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Dharma Venkateshan, an individual investor. Please go ahead.
Good evening, sir. Hope you are doing well and good, and congratulations on a great set of numbers.
Hello?
Hello, sir, you are able to hear me?
Yeah, not very clearly. Your voice is very faint. Not very clear.
Now it's better, sir?
Yeah, better.
Yeah. Sir, my question is more on the margin side. Like if we look at other industries where they work on cost-plus model like structural steel tubes, they give a number called as EBITDA per ton, which helps us to measure the performance of the company and how it's moving forward in terms of the margin. So is there any metric like that you could give us to the investors so that we are more clear on that the company is able to
Sir, unfortunately, your voice is not at all clear. It was breaking. There's quite a bit of static. Could not hear you.
Can you repeat, please?
Can you repeat your question?
Sir, if we look at other industries which work as under cost plus model, they give out a number such as EBITDA per ton, which helps us investors to understand the company's working. So, is there any number in our case which you could share with us so that we could understand how the company's margins are moving out inside?
Oh, so basically you want a comparison to one of our peers who is in the public segment, so to understand and compare what the company's performance in terms of margins is. Am I correct?
Not with respect to the peers, sir. Like if we look, for example, I'm taking structural steel tubes where they are also work on cost plus model, like companies like APL, Apollo or High-Tech Pipes. So they give out a number called as EBITDA per ton per quarter.
EBITDA per ton, okay. Right.
Yeah, so
the thing is, I can specify in the powder segment, our EBITDA per ton ranges from 30 to 35,000 rupees per ton. In terms of the foil division, our business is still getting established. We are not at full capacity in the conversion segment. We are not at full capacity in the printing segment. So as and when that achieves a full capacity and we have a full understanding of the product mix as well as the customer mix, it is only then that we'll be able to give a total indication of a EBITDA per ton in the foil division. So that's why in terms of EBITDA per ton in the foil division, we are not yet discussing on that, as we feel that the business is still evolving for us.
Okay, sir. And with regards to the foil segment, we are supplying to the pharma industry, and it is a value-added product. So, is there a cost lag with which we have to pass on the price hike or price down whenever that happens? What is the time period in that?
So, to pass on the price hike and price decrease, like we have seen over the last quarter, our experience so far has been that this gets settled within 1 week to 10 days. Where they are fair in they are also not oblivious to the LME. Definitely there will be some up and down of a rupee or 2 rupees when the price goes up or goes down. But generally, by and large, right now our experience has said that any price hike or price decrease is settled within 7 to 10 days.
Okay, sir. Thank you, sir. Thank you for the opportunity. I'm looking forward to get set of numbers in the future. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Dilip Sahu, an individual investor. Please.
Yeah. So, Manji, I just wanted to know, since we have been, I think, with our top 2-3 pharma customers, 8 to 9 months, how has been the ramp-up of our revenue with the top 3 customers in the foil business with pharma line?
Mr. Sahu, I don't have that data of the ramp-up of the top 3 customers with me right now in terms of, the pharma clients. But that being said, our pharma business per se started only around the month of November and December with the large pharma companies, and it is in the process of ramping up now.
Okay.
Yeah, so, I think we'll be able to give a more accurate picture after this quarter, where, we'll be enrolled with a lot of, other big clients, apart from, our regular clients that we are already catering to. Also, second fact is that a lot of pharma companies, they start business in a small way, but for their non-regulatory plants. And they only start business for the regulatory plants once the audit is complete. So, that way also we are catering to some companies in a very small way, but waiting for their audit so that we can, do much larger business with them.
Sure. So the guys like the Torrent or Hector, they are large players, right? So we would be, as of now, we won't be a significant player in their total foil usage, right? Is that a fair assumption?
No, I won't say IFCA, but in Torrent we are a significant player. We are a significant player in Torrent.
Okay. And second and last question is, once we do this rolling mill installation, which is by end of this financial year, what would be our peak capacity, assuming the aluminum foil prices remain at the current level?
So our peak aluminum rolling capacity would be 700 metric tons per month after the installation of the second rolling mill.
Yeah. So we can annualize around 170, 160 kind of revenue, assuming that everything runs at a peak level from next year onward, right? So assuming that the rolling is installed by Q3 and Q4, and we have got
rolling will be installed only by Q4, and annualized, we can achieve 150 crore with the current capacity at current aluminum prices.
And that will be around 50% full value added and 50% pure rolling bare foils.
Absolutely, and that is with the current capacity. With the new rolling mill, we can target a total top line of about 240 to 250 crore with the new rolling mill.
New rolling mill. And that will be next year, you are saying, next year end kind of number.
Sorry?
That will be the next year end kind of Q4 next year.
So you can consider it Q1 of the next financial year, where the revenue will start coming in.
Yeah, since you are on the topic, Manji, if you can allow me, if I have to do 100% conversion instead of raw foil at all, we decide not to sell raw foil at all and do 100% conversion. What would be the additional investment?
We want to maintain a balance. We also do not want to be totally reliant on the pharma industry, because this converted foil, there's another very lucrative segment is the house foil segment. The house foil and, anything up to 9 microns. See, pharma stops at basically 20 microns. The other foils that we can make are about 18, 12, 9, 10. So that is one segment where we do not want to exit, because there is a growing demand in India for that, which is referred to as house foil and also used in food packaging to some extent.
Correct. Yes.
So we want to be present there, and although theoretically we can do 100% conversion, but we want to keep a balance as of now.
Yes. And in terms of export, Manji, if you can give us some light about how is our exports shaping up?
So exports have already started in a small way. We have had consignments going to Bangladesh. We have had consignments going to Nepal. We are also pursuing the Nigerian market very aggressively, and some of the Nigerian companies again might come and audit us, and we are hopeful of some good sales to Nigeria, particularly this financial year.
Thank you very much, Manji.
Yeah, thank you.
For answering all my questions. Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you so much, everyone who participated, the interesting questions. Anyone who would like to address more questions and more details required from us, please feel free to email our CFO, and we will revert with specific answers to your queries. We hope that our journey together goes well, and we'll be very, very happy if any of you choose to visit our facilities. We will take you around all our joint ventures as well, and that will give you a more real perspective of the amount of development that has been done and that is likely to be done in the future. So welcome any of you who would like to come over to Nagpur. Ideally, it should be for 2 days, but depending on time, you can make your own program. We are at your disposal to answer your queries. Thank you so much once again, and we look forward to further interactions in the coming weeks and months. Thank you so much for the cooperation.
Thank you. On behalf of MMP Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.